Hello everyone, welcome back to another video. In today's lesson, you will learn to prepare the non-current asset account and also calculate the depreciation when we have multiple assets and multiple time frames. You will see the question on the left-hand side of your screen, and on the right-hand side, you will see all the workings which I'll go through step by step. What I need you to do now is focus and follow through the entire content for an excellent understanding, because this is a very important question for your exam. So with that being said, let's begin. Edgar Business is in the catering business. The following information relates to the motor vehicles of the business on 1 April 2023. So at 1 April 2023, we are given the cost of the motor vehicle, which is $95,000, and we are given the accumulated depreciation of motor vehicle, which is $35,600. On 12 July 2023, the business purchased a new motor vehicle costing $12,500 on credit from Daryl Limited. So based on this line, we know that in this financial year, the business bought a new asset, and that asset costed $12,500. The business policy is to depreciate assets at 20% per annum using the reducing balance method. A full year's depreciation is charged in the year of purchase. The financial year end is 31 March. The business also provides the following ledger on the sale of one of its motor vehicles. All right. So the requirement of the first part of the question is to prepare the motor vehicles account for the year ended 31 March 2024. All right. So I need you to understand some things first. So let's look into the workings of the right-hand side. So we understand that the financial year starts at 1 April 2023 and ends on 30 March 2024. Actually, it's 31 March 2024, all right? Because in March, we have 31 days. All right, so we are working with a business where the financial year starts on 1 April 2023 and ends on 31 March 2024. Now, we have been asked to prepare the motor vehicles account, which means we will include any purchase of new motor vehicles and the disposal or sale of any old motor vehicles within the ledger account. So here we have an outline for the motor vehicles ledger account, which is the usual 5-column format that you're used to. So starting with the opening balance on the 1st of April 2023, which is given in the table at the very beginning of the question. As you can see, the cost of motor vehicle at 1 April 2023 was $95,000. Now, motor vehicles in itself are assets, and all assets by default should have an opening balance on the debit side. So that is what we're doing on 1 April 2023. We're starting the account with the opening balance, which is also the balance brought down, and that's $95,000 recorded on the debit side because assets have an opening balance on the debit side, and that gives us a final balance of $95,000 debit. Then during the year, we also know that on 12 July 2023, we have purchased a new motor vehicle, and the cost of that new motor vehicle was $12,500. All right, so because we have bought a new asset, our assets have increased, right? So when assets increase, we debit them. So that's why we have included $12,500 on the debit side. And the details in this case is other payables, Daryl Limited. The reason I'm included Daryl Limited in other payables is because this line here in the question clearly specifies that this motor vehicle was bought on credit from Daryl Limited. Because the motor vehicles here refer to assets, we will write other payables, Daryl Limited, which means this is a credit purchase. Unlike inventory transactions where you would include trade payables are different to other payables. Trade payables refer to creditors or suppliers from whom you bought inventory on credit. But when you buy assets on credit, that's when other payables come into play. So that's why we're writing other payables, and to be specific, we're writing other payables for Daryl Limited, okay? And that gives us a final balance of $107,500 debit because we only have debit entries so far, which are added together to give us $107,500 debit, okay? All right, then what's next? We know that based on the last table that we're given in the question, we have sold one non-current asset during the year. How do we know that? You can see that we are given the sale of non-current asset account, and in the sale of non-current asset account on 1 Jan 2024, we have been given motor vehicle with the cost of $40,000. Now, how does this add up? So I'll show you a journal entry. So here I have a journal entry for the transaction on 1 Jan 2024. And we were discussing regarding the fact that one of the motor vehicles with a cost of $40,000 was sold. Now, when we sell a motor vehicle, what happens? Our assets go down, right? So that's why we will credit the asset account, which is the motor vehicle account in itself, and that is $40,000. And the reason this asset went down is because of the fact that we had sold it, which is what we show as the opposing debit entry for the sale of non-current asset, which is $40,000. So when we want to record this transaction in the motor vehicles ledger account, you will see that because motor vehicles are being credited by $40,000 due to the reduction in the assets, we are including the $40,000 on the credit side, okay? And with the relevant narration in the details column being the sale of non-current asset, which clearly specifies that we have sold one asset which had an original cost of $40,000. So when we have sold $40,000 worth of asset, and given that previously we had $107,500 debit balance, we subtract $107,500 and $40,000, and then we get $67,500 with more debits. Okay. All right. So during the year, we don't have any other transactions with regards to purchase or sale of any other non-current assets. So we can confidently carry this $67,500 debit balance forward in the next financial year, starting 1 April 2024. And that's why on 1 April 2024, we will open the motor vehicles account by writing balance brought down of $67,500 debit. Okay. All right. Now, the next part of the question is to prepare the journal entry to record the depreciation expense for the motor vehicle for the year ended 31 March 2024. Okay. Now, we have many complications involved here, so let's see what's going on and make sure you focus. All right. Okay, to begin with, we are going to start with the purchase of the new asset. You know that on 12 July 2023, we have purchased a new asset, which you can see on the question in the left-hand side, okay? 12 July 2023, we have purchased a new asset. And we know based on the company's policy, a full depreciation is applied in the year of purchase, right? So a full depreciation is applied here, which is multiplying the given percentage with the original cost. So 20% is the depreciation rate, and the original cost is $12,500, which gives us a full depreciation of $2,500 for the purchase of the new asset. Okay. All right. During the year, we also know that we have sold or disposed one old non-current asset. So let's look into what's happening there. So the non-current asset that we had sold, we know had an original cost of $40,000, and this is something we picked from the sale of non-current asset ledger account, where you will see the motor vehicle at cost, which we had sold, was $40,000, and the accumulated depreciation for that motor vehicle, which we had sold, was $14,440. Okay, so we have picked these two information. So the original cost being $40,000 and the accumulated depreciation of asset being $14,440, which gives us a net book value of the difference between original cost and accumulated depreciation, which is 40,000 minus 14,440, and that's 25,560. Okay. Now, make sure to check my other videos where I have prepared the sale of non-current asset ledger accounts so you can get a clear understanding on how to interpret similar ledger accounts. Okay. All right. So the net book value of the asset which we had sold is 25,560. Now, we want to depreciate the remaining old motor vehicle. Remember that the asset which we had sold has no depreciation in the year of sale, okay? Because we have sold it. But for the old remaining motor vehicle, we gotta still depreciate. But before we can do that, we want to know how much is remaining from the old motor vehicle. The way we can do this is to first find the net book value at the beginning of the financial year on 1 April 2023, which is simply the difference between the original cost and the accumulated depreciation, which is also known as the total depreciation. The original cost, as given at the very beginning of the question, is $95,000, and the accumulated depreciation is $35,600, which gives us a net book value at 1 April 2023 of $59,400. Okay? Now, from this net book value, which we had at 1 April 2023, this net book value initially included the non-current asset, which we had sold later during the year on 1 Jan 2024, right? So what we have to do now, we have to remove the net book value of the asset that we had sold from this net book value of $59,400, which includes all non-current assets at the beginning of the year, okay? So what we're doing here, so we're removing the net book value of the assets sold from this total net book value for all assets combined at the beginning of the year, which is simply $59,400 minus $25,560, and that gives us $33,840 as the remaining net book value for old assets that are still remaining, okay? So what we do now, we depreciate these old assets using the reducing balance method, which is to simply apply the given percentage with the net book value. So we are multiplying the given percentage with the net book value. The given percentage on the question is 20%. The net book value is $33,840 based on our calculations, and that gives us a depreciation of $6,768. Okay, so what's the total depreciation expense during the entire financial year starting 1 April 2023 and ending 31 March 2024? It's $2,500, which was the depreciation for the purchase of the new non-current asset, which went through a full depreciation based on the company's policy, plus an additional $6,768, which is the depreciation for the remaining motor vehicles. And altogether, we get $9,268 as the total depreciation expense for the year ended 31 March 2024. The reason we found the total depreciation expense is because the question clearly specifies for the year ended 31 March 2024. Okay, so which means all the depreciation expense combined since the beginning of the year, which was since 1 April 2023. Okay, all right. Now, how do we journalize this? Remember, every time we have depreciation expense incurred, it's the same way we journalize them. We always debit the depreciation expense account, which is an expense account, and all expense by default are debited when they increase. So we debit the depreciation of motor vehicles expense account by $9,268, and we always credit the accumulated depreciation account. And in this case, it's the accumulated depreciation of motor vehicles account, and the amount is $9,268. Accumulated depreciation of motor vehicles is a contra asset account, which means this is an account which records the reduction for a relevant non-current asset account, and the relevant non-current asset account in this case is the motor vehicles. So whatever reduction we have to record for the motor vehicles, that's recorded separately in the accumulated depreciation account, which is a contra asset account, and by default, when it increases, it's always credited. Okay, so that's the whole journal entry for the second part of the question, which is to debit the depreciation expense account and to credit the accumulated depreciation account. All right. Okay. All right. So that's all for today's lesson. I believe you found value in this content. Make sure to like this video and subscribe to this channel and share this channel with your friends. And if you want monthly coaching sessions or tutoring sessions to help you prepare for the upcoming exam, make sure to bring your parents and book the Zoom call that you will see in the description. It's a free call which you can discuss with me regarding your strategies and your weaknesses and strength in your accounting topics, and will help you fix them and get good results. I'll see you in the next lesson.